Hello friends, this is Raj Sastry from Raj Option Trading. Today is October 2nd, 2021. I want to talk about heavily shorted stocks and how to trade them. So that way we can become good at trading these heavily shorted stocks. So I got a list here. As you can scan through here, the top of the list is PBTS Power Bridge. It's a $1 stock. Very heavy short ratio, 44%, and also low float. It's a very low market cap stock, just $56 million, can be manipulated easily. And then you got your PROG here, little bigger market cap, 213, still small. And as you can scan through here, a very big short ratio, 42%. And we got AGC, Workhorse, and so on and so forth. So what we'll do is we'll look at these stocks in a little more detail and what stocks we can buy right now and what stocks we can take some profit and go from there. And as usual, pay attention to what insiders are doing, what institutions are doing, and also look at the sales growth. If you're a fundamentally inclined investor and trader, look for a nice sales growth and gross margin indicated by right here, green in these two columns. This easily satisfies rule of 40, where quarter over quarter sales growth plus gross margin greater than 40. And then look at the short ratio. All these stocks have great stock ratio, short ratio. Then if a stock has already made a move indicated by yellow in 1 day and 5 day, wait a little bit. There is no need to rush. On the other hand, if stock is turning around now and making a move, like we got AGC here and we got Big Five, it's okay. These are turnaround candidates. Pay attention to RSI. If RSI is high, like PROG, red sign. Don't buy right now. Wait for a little pullback. But if RSI is low, like Workhorse here, and we got few more HRTX and Lemonade, that could be a good opportunity. Generally, when RSI is less than 50 or so, that's a good time to slowly buy and make a small position and build the position from that point onwards. So with that, let's jump in here. Look at the broader market. So from a broader market perspective, S&P 500 is really on a downward trajectory. As you can see here, we had one good day on Friday, but we are not out of the woods yet. Right now, S&P 500 is really bouncing off of 100-day moving average. So we will watch this carefully. Generally in the market, there is a sentiment that inflation may go higher due to supply chain shortage, oil and gas going higher. That's why we got to be a little bit careful here. There is also news about Fed bond buying may taper off. So those are some things you have to watch out carefully, and we have to watch out for jobs report coming next Friday, and go from there. That's why market is kind of wait and watch type mode here. Carefully looking at inflation fears. That's why it's kind of trading sideways here. And then we got Nasdaq. Nasdaq also traded downwards, as you can see here. And right now Nasdaq is trying to bounce off of its 100-day moving average, just like S&P 500. And then you got Dow Jones Industrial Average. It's also below its 100-day moving average. Try to make small gain here. As you can see here, we had a good day on Friday, but we'll watch this also carefully. And then you got Russell here. Russell also is below 100-day moving average, and it's also trying to bounce off of 100-day moving average. In a nutshell, market is showing some volatility as we enter into October. Be careful. If you want, feel free to take some profit off. These big rallies are good to take a little bit profit off the table and have some money, because we can expect continued volatility as we go through October and November time frame. So we'll jump in and go into a little more detail here. So you might wonder, stock market is a very small market compared to bond market. So bonds are basically saying, what, be a little careful here. There is a chance inflation may go higher. So this is the 30-year bond here. 30-year bond came down here because there is inflation fear. On the contrary, the TNX 10-year treasury, which is really the rates, the rates are going higher. That's why stock market tanked big time. Now the rates are coming down a little bit. That's why stock market is taking some breather and market went up on Friday. And as you look through here, gold is still a good buying opportunity. Anytime gold dips like this, I would be a buyer in gold. Look at some quality gold names like BATIC Gold, and you can also look at GDX and also GLD. And as you scan through crude oil is strong. This is also causing some inflation like fears. I will be careful with crude oil. I would not buy at the top here. But if crude oil falls like it did here, I would be a buyer in good names like CVX, which is Chevron, EOG, Exxon, Continental Resource, to name a few. So with that, let's jump in here and look at broader markets here. S&P 500 clearly went up nicely after the COVID related issue here, and right now it's falling down, as you can see here. Still we are near the top here, not too much correction yet, so we'll be watching this carefully. On the contrary, the Skew, which is watched widely by stock market and the big hedge funds, Skew is dropping down here. So that's telling you, hey, you know what, right now, it's okay to buy selectively good quality names. If the Skew is above 160 or so, I'll be very concerned. I would not buy any stock. But Skew has fallen down. That tells you folks are already afraid of the market right here. So it's okay to buy selectively and take it from there. As you can see here, Skew hit all-time high around 170 before stock market tanked. So typically, Skew tells you, hey, you know what, wait, something is coming up. So it gives you a heads up maybe a week or 2 week or 1 month before. That's what happened here. Skew has been telling us, you know what, Skew's above 150, 155, be careful. So it's been telling us since a while. Now we have a small drop here, and now we can selectively buy. Given Skew is around 135 level, I'm comfortable buying some quality names and go from there. And as you can see here, inflation, the VIX itself is a little bit muted here. I will be a little careful here, but I will buy quality names given Skew has fallen down. Anytime Skew has fallen down, see here, stock market tanked, Skew came down, good buying opportunity. Um, Again, one more, Skew tanked, stock market had a small correction, good buying opportunity. Anytime Skew comes around 130, 135, call me a selective buyer. I'll be buying selectively and position myself for an upturn. So with that, let's jump in here. From a top news perspective, we got few news here. PowerBridge Technology, very low cap stock here, establishes some crypto holdings here. I'll be selectively buying this company, given it's a very small market cap company, can be easily manipulated. And then you got Workhorse Group. Looks like this stock has taken a lot of beating of late. I'm selectively buying Workhorse, on this very high short ratio, and position myself for a nice short squeeze. And then we got Kathy Wood here. She's dumping 15 stocks. As you can see here, GWRE, MKTX, and so on and so forth. Many of these are momentum names. And as you see, Kathy is not doing well this year so far. She has done 740% last year. But all these momentum names are a little bit losing their momentum. That's why Kathy's portfolio is struggling this year. We will be careful. We'll look at the quality names and go from there. And then you got Stitch Fix here. It's a very cheap stock to buy according to Motley Fool, and it continues to build on its double-digit momentum here. So I'll be carefully watching Stitch Fix. Normally, if Stitch Fix comes down with a high short ratio, it's a good to slowly buy a little bit. because Stitch Fix has a tendency to announce a great quarter and crush the short folks. So I'll be buying selectively and wait for a nice pop. And then you got here FAMI. Looks like they are expanding. So stock has shot up nicely and came down a little bit. I'll be watching, very carefully and buying as it comes down a little more and have a small position. And then you got Petco here down 26% so far, and looks like they're doing well. They got nice top line performance here, and also they have a lot of Gen Z consumers, so it could be okay to buy some Petco slowly and accumulate. And then you got Canoe here. Looks like they're building some safety software here. I think it's okay to buy Canoe slowly and go from there. And then you got here Fisker. Fisker, I think it's a good play as it comes down. It's good to accumulate some Fisker and go from there. And we got Lemonade, one of my favorite insurance play here, digital insurance. It's been very volatile. I'm willing to buy some Lemonade into this weakness here and accumulate. So with that, now let's look at the list here. So as you can scan through, at the top of the list we got very high short ratio, Power Bridge, $1.17 stock here, very low market cap, just 56 million. And as you scan through, very high short ratio. And then you got your descending order from there. So pay attention to what insiders are doing, what institutions are doing. For example, PROG, very big insider buying here, whereas PBTS, very high institution buying here. Pay attention to what insiders institution doing, and then look at the sales growth here. Anytime you see quarter over quarter sales growth and gross margin greater than 40, indicated by green in these two cells, that's always a nice fundamental stock. And then watch out what's the short ratio here. These are all very high short ratio. And watch out for the RSI. When the RSI is high, like PROG here, indicated by red, I would shy away. Given it's had a great run in 1 day and 5 day and a high RSI, don't buy at the time. Let it cool off a little bit. On the other hand, if the stock is already cooled off here, like Workhorse, low RSI, stock has been down a lot, it's okay to buy slowly and accumulate a small position. So as you scan through, what I've done is I also indicated few stocks. For example, if you're a fundamental investor, look for green in the first column. For example, here Big Five, Stitch Fix, SDC, ATER, all have got rule of 40 satisfied, meaning quarter over quarter sales growth plus gross margin greater than 40. These are for you fundamental investors, so that way you don't need to worry too much. But on the other hand, if you want to really play the short squeeze game, you could look at high short ratio and low RSI below 50 or so, and then you can play the short squeeze game. Those are for you technical investors or technical traders. Then we also have high short ratio, low RSI. For example, Power Bridge, AGC, and so on and so forth. They got high short ratio and low RSI. Those are really for swing traders. They don't need to worry too much about fundamental. They are swing traders. You could trade those stocks given they have pulled back. And then we got here investor institution buying. Anytime you see green in the third column here, these are the stocks where we have high insider buying or high institution buying. For example, PBTS, very high institution buying. That's why it's highlighted here. You could, if you're a fundamental investor, look at this also. If insiders or institutions buying, that's always a good indication, coupled with the nice fundamentals where rule of 40 is satisfied. So with that, let's look at few stocks here and go from there. So I would like to look at stocks like Power Bridge here, build a nice position. and also look at AGC, given there is a high short ratio and low RSI. Workhorse is a good one. I would look at that one too. And then we got here all set. It's into real estate development, very low dollar stock, as you can see here. I would slowly accumulate this one too. And then you got Petco, nice stock here. Stock has been dropping down, high RSI, low RSI, high short ratio. And also, as we see here, institutions are buying OOF. I would buy some OOF into this weakness. And also Nikola, Canoe, I think these also check the boxes here. High short ratio, low RSI, as well as high institution buying. So I would look at Nikola as well as Go EV here. And as you scan through his Smile Direct, it's an intriguing one here. It's got both fundamentals when it comes to sales growth, as you can see here, and also high short ratio, low RSI. I would slowly start buying SDC at these levels and take it from there. SDC has got a little bit high float, but I think it's okay. We can make it work. And then we got a few more here. ATER. It may be okay to buy fundamentally good company with nice institution as well as insider buying. And also we got nice sales growth, as you can see here. And then you got your BTCM, Bitcoin mining company. I think it's good to slowly accumulate with all the fear on Bitcoin. It's good to accumulate companies like BTCM and BT, Marathon, Riot blockchain into this weakness here. And I also like Heron here. This is a wild trader. Right now, insiders are buying, institutions are buying, as you can see here. High short ratio, and RSI is 35. I would buy some Heron HRTX into this weakness here. This also try to turn around in the short term, as you can see here. And we got Lemonade, one of my favorite here. And we could look at Oxygen and Ride. And as we look through here, see what's going on in the shorter term in 1 day, 5 day. In 1 day, 5 day, if you see a yellow here, it tells you caution. Don't buy at this time. Let the stock come down. On the other hand, if it is slowly going up in the shorter term, like here, PBTS, PROG, and we got Workhorse, Big Five. And if you see here, Stitch Fix, these are telling these stocks are about to turn around and you can buy slowly. So that's why I love these turnaround candidates with the low RSI especially. So that way we can buy some and participate in the turnaround or a squeeze or a short squeeze, as you call it. So that's why I pay attention to what's going on in the near term. These stocks like any, it's also trying to slowly turn around here. And we got OOF, same story. And pay attention to those, even here, Heron and BTCM. I would pay attention, but on the other hand, if the stock is already going well, for example, BTB here, it's already up 14%. I would wait a little bit. There's no need to rush. So next we look at one more chart here. Apply same methodology here. Look at what insiders doing, what institutions are doing. I would focus on stocks like Shift4, as you can see here. Shift4 has fundamentally good company, satisfies rule of 40, as you can see here. High short ratio, low RSI. I would look at that one here. And as you'll see here, Shift4 also has low float. I think it's a good one to buy. And then as you scan through, we got a few more here. We got Recon, both high short ratio, low RSI, as well as institutions buying very heavily. It's a Chinese stock, has been down a lot. Now it's showing some momentum, as you can see here. RSI is 46. You can still buy some Arcon at these levels here. And then you got a few more here. Beyond Meat here, fundamentally good company, nice sales growth, as well as there is a high short ratio, low RSI. I would buy some Beyond Meat at these levels, and go from there. And if you're an option buyer, As you can scan through here, IV percentile is low, RSI is low. You could some buy option and participate that way too, given it's a high price stock. Then we got here Wayfair. Wayfair looks like high short ratio, as you can see here. Typically Wayfair is a very wild trader around the quarter ends and earnings. I would buy Wayfair into this weakness here, given there is a high short ratio and RSI is low. Then we got few more here. SENS. Again, SENS checks all the three boxes here. High short, we got nice sales growth here. Rule of 40 satisfied, and high short ratio, low RSI. Second box checked, and also it's got institution buying, as you can see here. So with that, I would venture into buying some SENS, given it's a low dollar stock and has been sold off, trying to turn around here. I like it when all the three boxes are checked here. That indicates it's a better buy. Then we got a couple more here with the BBBY, nice fundamentals, high short ratio, low RSI, and then we got your AMC and RGS, and also RIOT blockchain. All the three boxes are checked here. I would look at these candidates here and take it from there. And RIOT blockchain looks like it's turning around, as you can see here in the shorter term in 1 day. That's always a good indication. With that, let's look at next chart here. We got few more here. You can look through in detail. I will talk about few stocks here and take it from there. As you scan through, we got Hyliion, again a EV play here, high short ratio, low RSI. Looks like institutions are buying heavily. That's always a great indication. And we got Skills here, same story. Nice high short ratio, low RSI, and also we got institution buying. So that's a good sign here. I would look at that one too. And we got a few more here. Dix, TIGR ticked all the three boxes here. It's good. Rule of 40 satisfied, high short ratio, low RSI, as well as institution buying. I would look at the TIGR here and go from there. And we got Real here. Again, a great play here with the nice sales growth, satisfies rule of 40, and also we got high short ratio, low RSI. I would look at Real, given stock has fallen off drastically, and there is some really good time to buy now on this pullback. Then we got a few more here. Shift for Kala, sorry, not Shift for SFT, Kala here, Siri. I would apply same methodology. Given many of these stocks have got high insider or institution buying here, as well as nice sales growth and high short ratio, low RSI. If you're an options trader, look at what IV percentile is and how is RSI doing, and apply those methodology to buy options or sell options. Then we look at next one here. We got few more here. We got stocks like LTHM here, rule of 40 satisfied, and we also have high short ratio, low RSI. You could look at that one, buy slowly. And we got few more like MVIS is a great play here. All three boxes checked. You could look at that too. And I love Fastly. It's a great company. I think right now rule of 40 satisfied, high short ratio, low RSI. So with that, as usual, pay attention to what insiders doing, what institution doing. Stock like GoGo here, GoGo has got both institution buying, insiders are buying, but the only problem is right now stock has gone up already with the high RSI level. I would wait on GoGo here, given short squeeze already unfolded here nicely. And look at what RSI levels are, what IV percentile is. And if the stock has gone up nicely in last 1 day or 5 days, like CPE here, and also we got here one more stock here, GoGo, and one more CDAO, don't rush in. It's okay to wait a little bit, let them cool off, have some caution here But on the other hand, if RSI is low, you can slowly buy those names here. And we got one more page here. So here really this is a little bit conclusion. What I've done here is really, instead of sifting through a lot of these names, I've highlighted the stocks where rule of 40 is satisfied, meaning a great sales growth and gross margin tick, and high short ratio, low RSI, that's also satisfied. And we got your institutions or insiders buying heavily. So all the three rules are satisfied here. And if you are a conservative investor or a trader, you could look at these names here. Given there is a low RSI, nice sales growth here, and institutions or insider buying, these could be a little smarter candidates for you to buy and participate in the short squeeze, and I think have some fun with the short squeeze. And if things take a little longer, given these are fundamentally good companies, you're not too much worried because this will come back. So with that, now let's look at a few stock charts. And we got your big five sporting goods. I think this company has been trading a little bit down of late, trying to make a small, increase or a positive trend here. Right now, stock is trying to bounce off of its 100-day moving average, as you can see here. And as you scan through it on the balance volume, is kind of steady here. So as you scan through big five sporting goods, as you see here, nice sales growth satisfies rule of 40. And as you scan through, we got high short ratio, low RSI, and low IV percentile. So I would buy big five into this small drop here, take advantage of high short ratio, low RSI, and also fundamentally good company. All the three boxes are ticked here. It's a safe bet to buy slowly. And then we got here BTCM, a Bitcoin trading company. Again, all the three boxes are ticked here. Nice fundamentals, high short ratio, low RSI, and insiders or institutions buying. So I would look into this one here. Stock is trading sideways, and as you scan through here on the balance volume is pretty steady on the higher side. And then you got SENS. As you can see here, stock is nicely, I think overall it's going up. Right now it's trying to bounce off of its 100-day moving average, and as you scan through here on the balance volume is also rising. So I would take advantage of this here and buy some SENS into this weakness. Very low dollar stock, as you can see here, $1.5 billion market cap. And last but not least, AMC. It was a one-time favorite meme stock, losing some momentum here. It also satisfies all the three boxes here. Rule of 40 satisfied, high short ratio, low RSI, as well as institutions buying. AMC here. Institutions are finding good value here. That's why they're buying as the stock is trading lower. On the balance volume is pretty steady. I would buy some AMC into this weakness here and take it from there. And next we got a few more stocks here. First one is RIOT Blockchain. Again, stock is trading sideways, as you can see here. There is a lot of news about crypto in the market of late. That's why crypto stocks are coming down. I think it's a good one here. Stock is coming down. On the balance volume is pretty steady here. Satisfies all the three boxes here. Fundamentally good company, rule of 40 check, high short ratio, low RSI, as well as institutions buying heavily. Institutions are finding value in RIOT Blockchain here, given stock has dropped off. There is a lot of news in the market, that's why they're buying heavily. I would buy along with them here. And then you got TIGR, China-based security trading company here. Stock has been down badly, as you can see here. On the balance volume is pretty steady here, and it also ticks all the boxes. Fundamentally good company, rule of 40 satisfied. As you scan through here, low RSI, high short ratio, as well as institutions buying heavily. So I would buy along with the institutions here. I think institutions are finding a value in the company at these levels here. I think this also should create some short squeeze as we go forward. And then we got here Sunworks. It's a solar play here. Stock has been trading sideways. Nice on the balance volume. Nice sales growth as you can see here. And institutions are buying. High short ratio. Low RSI. Out by some Sunwork here. Low dollar stock here. And take it from there. Next we got Nordstrom. It's a retail play here. Nordstrom has been trading sideways. This is also a wild trader around the earning. Given stock is down here, RSI is a little bit down but pretty steady here and satisfies rule of 40 and high short ratio and low RSI. I would buy some JWN at these levels here and participate in the short squeeze. And next we got three more here. China-based FTFT here. Stock is down. On the balance volume is pretty steady. I would buy into this here. Satisfies rule of 40. Nice sales growth, gross margin. Institutions buying very heavily. Low RSI, high short ratio, and even low float. I would buy into FTFT to this weakness and take it from there. And then you got MVIS here. Microvision. $10 stock, satisfies all the three boxes here. Nice sales growth, high short ratio, and as you can see here, low RSI. Float is a little higher for this stock given it's a little higher market cap. I would buy into MVIS into this weakness. See here, look, nice on the balance volume. I would buy some MVIS, position ourselves for a short squeeze. This is also a wild trader as you can see here. And then you got BNGO. BNGO, as you can scan through here, stock has been trading sideways. On the balance volume is nice. Institutions are buying heavily. High short ratio, low RSI. Perfect candidate to buy a little bit. And looks like nice on the balance volume. I like it. And next is HIMX. It's again into semiconductor industry. Stock has been falling off. On the balance volume pretty steady, little decline here. Rule of 40 satisfied, nice sales growth, nice gross margin here. Institutions are buying heavily, and as you can see here, high short ratio, low RSI. I would buy into HIMX here and take advantage of HIMX, high short situation here. So with that, you might wonder, hey, when do I buy and sell stock? There are so many stocks. So I have a quick cheat sheet for you so you can play along with me here. So from an entry point perspective, if you're a stock trader, look at a low RSI level. RSI less than 55 or even less than 50 is preferred in my books. And then, on the balance volume rising. If it is racing, it's good. But if you're a technical trader, don't worry too much. Sometimes you can be contrarian, but make sure RSI is less than 50 or 55. From an exit point perspective, make sure RSI is greater than 60. So that way stock is in a overbought type territory slowly, and on the balance volume is falling. So that's a good time to take some chips off the table and position yourself and have some money available. And if you're a fundamentally inclined investor and trader, look for rule of 40 where quarter over quarter sales growth plus gross margin greater than 40. Thus that tells you, it's a good fundamentally sound company. And from a catalyst perspective, look at short float greater than 10%. All the stocks we covered have got a high short float. And also institutions buying or insiders buying. Those are good catalysts for you, coupled with the rule of 40 here. And I know many of you are options traders. For an option trader, clearly, you can look at call buying. You are a bullish here, you want stock to go up. In that scenario, look for oversold companies with RSI less than 35 and IV percentile below 35. That tells you you're not paying too much to buy call option. As usual, make sure you go at least 90 days or further out when you're buying call option. And if you're selling a call option, you're typically a bearish type, person in the market right now. You expect stock will fall down a little bit. So look for overbought scenarios where RSI is greater than 60 and IV percentile is greater than 60%. You want to make sure you're selling a call option at a higher price above the stock price, and because IV percentile is high, you are bringing in more premium here. That's why I look at this combination here. Stock is over bought here. That's why RSI greater than 60. You want stock to come down and you want to bring in good premium. That's why it's important to have IV percentile greater than 60 or even 50 is okay. And then we got your buying put option. Many of you, I know, you want to buy put option, hedge against market dropping. When you want to buy put option, look at the scenarios where RSI is greater than 60. You are bearish right now. You want stock to be overbought, and probably you want it to fall down. And also, since you're buying the put option here, you want IV percentile to be low, so that way you don't pay too much money to buy put option. And last, I know many people they make a living by selling put option. For you put option sellers, you are a bullish person and you're looking for some temporary weakness to sell some put option and earn some income. So you want to make sure your RSI levels are below 35, and that's why you want stock to be oversold, and you can expect a nice bounce, and you want the IV percentile to be greater than 50 so that you bring in some good premium. And if it's a ETF, it's okay to look at IV percentile greater than 40 or even 30 for big ETFs. So with that, that's a wrap. Thank you very much. Happy investing and trading. Please subscribe.